Why am I not into the
Yeah.
It's there. It's not there, but it's not picking up on the.
Full connection. So, can you show me? It's quite unique because this is.
Even I saw the problems with it. It's very difficult. I thought trying to connect the screen. Yeah, I was plugged in when nothing happened because the plug was broken. So I put away the flags on it. It is. Just was colors we didn't do. Can't see anything on the screen, but I can deny it. Most probably got.
Hello, Dinai? Hello, Dinai?
Morning.
Very pretty. She's not to mine.
Spain?
Hi, Jess, can you hear me?
Yes, now we can hear you, thank you.
Okay, cool, thank you.
Good morning, good afternoon. I suppose that you can all hear us from the NMC building. I would like to welcome you to our annual general meeting for 2022. All members present, and specifically a special welcome to our members. I also like to give a special welcome to the investment consultant, actuaries, the NMFISA, and the representative from our auditors, including also our service providers, specifically the mental. By the show of hands, can we just confirm that you can hear us?
Yes, we can hear.
We can hear you.
Thank you very much. We can proceed with our meeting for the day. You have all seen the agenda. The agenda has been posted on our website for the past 2 weeks. We have about 11 items or 10 items that we are going to cover today. So the first one is the opening. By introduction, my name is Phineas Mutoda. I'm the chairperson of the fund. I've done the opening and welcoming. I'll give over to our PO, Alison, who is then going to inform us whether we have constituted this meeting.
Thank you. I too welcome our members, trustees and stakeholders, including our two regulators, NAMF and NMFISA. Just the little bit of housekeeping I need to do is according to the fund rules, this meeting has to be advertised. It was on social media for the 17th of May and the 21st through to the 24th of June. On our website, also the 17th of May. In the Republicain AZ and the Namibian Sun on the 16th and 30th of May, and the 6th and the 21st of June. In the Namibian, the 23rd of May, the 6th of June and the 21st of June. And a bulk SMS went out to all members on the 6th of June. With regard to a quorum, according to our fund rules, we need at least 200 members present at today's meeting. We have 25 proxy holders of 535 proxies. And I'd just like to find out how many members are in the meeting right now. 31. And we have 31 members present at the meeting. Also in the boardroom here today are 3 representatives from MedHealth, the chairperson, the vice chairperson, the representative from EY, the auditors, and 1 trustee as well. So we have 3 trustees present in this boardroom. With that, I would like to hand over back. Apologies, I'm not very technological. Person who can continue as we have a quorum and the meeting can go on.
Thank you, Alison. The next agenda item is the approval of the AGM of 2021 meeting minutes. The minutes were also circulated and they've been also posted on our website. We've requested that should there be any comments that be submitted well in advance. Can we then have somebody that attended the meeting, the AGM of last year, to approve this meeting, the minutes? We have somebody then move the motion to approve the minutes. Thank you, Mark. Any second? Thank you, Angrid. We have the minutes approved. So then the next agenda item is then the report from the chairperson's office. So I'll give then my my report for the financial year ended 2021. The year 2021 began with renewed hope for normalcy and optimism for accelerated economic activities that would see livelihood restored. In 2021, the fund received contributions amounting to 1.57 billion Namibian dollars, having projected claims at 1.4 billion Namibian dollars. The fund experienced higher than anticipated claims of 1.539 billion Namibian dollars for the period under review, up from 1.3 billion claimed in 2020. Our contribution income for the period was not sufficient to cover the claims and expenses amount of 1.6 billion, and therefore resulting in an operating deficit of 108 million Namibian dollars. On a positive note, the fund managed to generate 72 million in net investment returns for the financial year ended 2021, which amount suppressed the impact of the high claims experience and decreased the operating deficit to 36 million Namibian dollars. Comparison, the investment return for the period under review was higher than the 24 million that we received in 2020. Despite economic hardships, the fund membership grew by 2.1% from 29,490 members in 2020 to 30,113 main members in 2021. At the end of 2021, our solvency ratio was equal to 34.4%. The year 2022 marks the fourth year of the fund's 5-year strategic plan. The focus of the last 3.5 years was striving toward service excellence. Increasing efficiency of the fund remains a priority objective, and the trustees move to adjust the Met Health service level agreement requirements to meet members' needs. Review controls for fraud, waste, and abuse, and address members' affordability and benefit needs, just to mention a few. Because of some of the above-mentioned interventions, we have started seeing significant reduction in claims turnaround times, as well as improved new member registration turnaround times. There is more that we still need to do to ensure improved members' experience, and of high importance, the affordability of our services. The Board of Trustees would like to thank all members for their continued trust as we work toward delivering on the promise. We, the Board of Trustees, management, call on your continued support as we take on new and innovative solutions to ensure a sustainable fund that meets the stakeholders' expectations. Thank you very much. With that, I will then hand over to our administrator, Florian, who's going to give us the administrator's report.
Okay. Good morning, good afternoon, everyone, and thanks, Mr. Chairman. Can you hear me? Thank you very much. Good afternoon, everyone, and I hope you can hear me.
Yes, we can hear you.
Okay. Thank you very much, and good afternoon, everyone, and good afternoon, Mr. Chairperson of the meeting. I have a short report to present to the AGM, and I must admit that 2021 proved to be a challenging year with the height of COVID reaching its peak in June and July. During this time, we experienced higher claims and volumes. MedHealth Namibia administrators put processes in place to ensure that member and service provider claims were honored during this critical time. We are incredibly proud of our team at MedHealth, which ensured that we took care of the needs of members and health professionals. We want to thank the NMC Board of Trustees, the principal officer, staff, members, health professionals, and all stakeholders for their support and trust during this trying time. We look forward to contributing to the recovery of our country whilst ensuring that we support the fund, its members, and their health professions. And thanks everyone, and I hope we see a better 2022. Thank you, Mr. Chair.
Thank you, Lorian. That was the remarks from the administrator. We move now to our next agenda item, which is the executive review by the actuaries. This is going to be presented by Nico. I'm informed that it's going to be Mweneni.
Yes, Mr. Chair, that will be me. Thank you.
Thank you, Mweneni.
Good afternoon, everyone. Good afternoon, trustees and all the NMC members. Yes, my name is Mweneni Mungei from the actuaries, and I did prepare a presentation for this afternoon, but a brief one just to get an overview of the financial performance of the fund for the year 2021. So if you may just allow me to share my screen. Sorry, Mr. Chair, I can't share my screen. Ben, can you perhaps share my slides from your side?
We'll do so shortly.
Stay.
Okay.
Thank you.
You can see your screen, Munini.
Okay, great. Thank you. Okay, you can use my screen. Or you're sharing from your side?
We were able to share it. Can you see it on your side?
Yes, I can see it from my side, yes. Great, thank you. Okay, so on the agenda, I'll just look at the financial performance of the year 2021, which we already have a brief from Mr. Chair on that, and also just taking a bit of history of the performance just to add up to the puzzle of where we are today. And then just look at the membership, the benefit and contributions. And then I will just sum up also looking into the outlook of the current year experience. So we can go ahead, Brian. Okay. So in terms of the financial performance, I think this was already summarized by Mr. Chair on how the fund actually moved from 2020 to 2021, where we actually experienced quite a significant deficit in terms of the operating results of the fund. So the contributions that have been received was actually not adequate to cover the expenses of the fund for the year, which is mainly driven by high claim experience during the third wave of COVID. So if we are to compare that to 2020, where we actually had a surplus, of which the 2020 surplus was mainly driven by the lockdowns, the lower claims during the lockdowns. We have then seen a lot of that coming through in the 2021 financial year. But fortunately, the investment return actually came in quite as a good buffer, and we only ended up with a net surplus of 36 million which is taking us to the solvency level of 34.35%. So overall, it was quite a difficult year in terms of the high claim experience, but the fund actually still maintained a healthy solvency level. So next slide, please. So that is just still the financial performance, but actually just adding a bit of history to that just to see how the fund actually moved from the prior years. We can actually see the trend in the growth of both the contributions and the claims as well, but with a gap between the contributions and the premium actually becoming quite lower. And the blue line graph that we have there is just an indication of our net surplus. So we actually have, when 2021 came down to a deficit, while we have experienced a surplus for the prior years, with 2019 also coming down like close to zero in terms of the surplus there. But overall, we can actually see how 2021 actually hit us a bit hard in terms of the high claims experience there. Okay, so the next one. That shows the solvency level. The solvency level, that is it's a percentage of the surplus or the reserves of the fund, the net reserves of the fund as a percentage of the contributions that is received for the year. So by regulation, NMC requires that at least a minimum, the funds must maintain a minimum of 25% solvency level. And over the years, NMC have managed to at least maintain a solvency level of about 30%. We've actually went a bit high, up to 36, 37 in 2020 because of the lower claims experience there. But then definitely now coming down to lower reserves level because of the high claims experience. So if we could extend that a bit into 2022, we'll also see that graph moving down as claims continue to be higher in 2022, but I'll get to that as well as I go along my presentation. So the next slide, please. Okay, that is the expense ratio, which is the non-healthcare expenditure as a percentage of the premiums. We actually see how the fund managed to maintain a low expense ratio over the years. In fact, starting off from 2013 over 10%, and it has been consistently below 10% for all the current years, although there is a slight pickup in 2021, the fund actually still managed to keep the expenses, the non-healthcare expenditures quite within the reasonable range, despite the high increase in the claims that has been experienced over the year. The next one, that is the membership trend. Just looking into how the fund have actually grown over the years, and they have been fairly stable for the past couple of years, and that is also an expectation from the industry that over the last few years there have been quite a low growth into the membership of the funds. Just the next slide, please, and I'll just talk a little bit more on the membership and why it is important to the fund. So the increase in memberships that we have seen mostly is coming through on the lower options sides, and also in more recent options like Jade is quite one of the recent options. There is also an Amber and Emerald Plus that have been introduced. So the newer option have received an increase in membership, while the bigger and older options of Ruby and Sapphire have experienced a slight decrease in membership, which can also be attributed to the fact that the economic times are getting hard and members are actually slightly downgrading to lower and affordable options. But it is quite, overall, it's quite important to continue growing the memberships of the fund. It is quite an important area to actually focus on the medical industry overall, because you would want to have a bigger membership for a better risk pool. Then you have a diversified risk pool of members where you have lower claimers and higher claiming members within the same risk pool that are actually subsidizing each other. So the fund is also just actively working on to the marketing activities and strategies in order to actually maintain a bigger membership pool despite the hard economic times that we're currently experiencing. The next slide. That just touches on the benefit and contributions of the fund, which I've slightly touched on how we have in a relation to the claims and contributions payments that we paid out for the previous year. The intention of the fund is at least to ensure that the benefit remains competitive and relevant, and allow for medical inflation as the cost of medication also increase or healthcare expenditures increases. It's also quite important to create a balance between the contributions and the premium, because you wouldn't also want to introduce benefits that are going to be costly to the fund that will eventually increase the premiums payable to the fund, because the two are quite interlinked. So the intention of the fund is at least to make sure that you maintain lower benefit changes at this point in time, to also just maintain reasonable contribution increases that will be passing through. So for 2022, we have an average increase of 4.4%, which is quite in line with the increase in the tariff or the medical inflation. I think it was averaging about 4.2%. So if we actually get to look at the component that made up the increase of the contribution, we actually see that the contribution increase that has been passed across is, in fact, is even slightly lower than the actual contribution that is required. And the expectation was also, the projection was that the fund will slightly have a slight negative deficit at the end of the current year, given that the contribution increases that have been passed across does not sufficiently cover for the expected claims or expenses of the year 2022. So there were also other limits onto the benefit limits that have been improved on the benefits over the years, that I'm not going to get into detail with, but I think the idea is just really to get the balancing right. So you allow for the benefits that are actually affordable to the fund, and that allows the fund to pass through lower contribution increases year on year. To the next slide. That is just an overview of the COVID and how it impacted the funds, and we can actually see the high hospital cases and the high confirmed cases during the third wave of COVID, which has resulted in the high claims that we have seen in 2021. But the current effect going into 2022, we actually had a slight very mild wave at the beginning of the year, and currently the fifth wave also coming through quite light. So the impact of COVID on the claims experience or on the medical aid fund have subsidized. However, we're still experiencing high claims due to other post-COVID effects. To the next slide. Okay, and this now speaks to the first quarter of the current year, and it basically speaks to also what I was just saying earlier on what we are experiencing, the post-COVID effect that they're currently coming through, and probably a portion of the high claims that we're experiencing in the first quarter also being the fact that some of the procedures have been, the elective procedures have been on hold during the high peak times of COVID, that members are now getting comfortable to get back to the doctors to get all those procedures done. But the outlook for the first quarter of 2022 is that we have high claims than we have expected. Initially, we did budget that we were going to be at the deficit of about 30 million, it is almost double what we have expected. It seems as more claims are actually coming through. We're getting a much higher deficit than we have expected. And that have then just also reduced our solvency level at the end of the first quarter down into 29.8%. The funds still have a healthy position or healthy reserves to carry us through, but it is also quite concerning that NMC and indeed the entire medical industry at this point experiencing quite higher than expected claims. So we are hoping that as the year goes by, then we will stabilize and we will get to be in line with the budget. But the focus of the current experience for the current quarter actually doesn't look that good. And unfortunately, the investment return also, the investment market didn't come out strong for the first quarter, so the investment return was also much lower than expected. So in summary, yes, we are experiencing quite an increase in claims for the first quarter. We do have high claims experience especially on the hospital side of things, which is could mainly be attributed by the post-COVID impacts and then the elective procedures that are also coming through. But despite the experience of the first quarter, we are still very positive that the fund have a healthy reserve to actually absorb the high cost that we are currently experiencing. It is just important that one need to then try to monitor and maintain the claims within the reasonable range so that what we are currently experiencing, the high claims experience that we are currently going through, shouldn't be an ongoing thing, but it's actually a hump that we are just going to pass through. So it's quite important, like in future, to just for the sustainability of the fund to ensure that at least we maintain the claims at a more reasonable level than what we are currently at. So we are still expecting the fund to be in the financial sound position by the end of the year. And we also expect the contributions to be in line with the medical tariff that will be issued, unless really out of odds, the current high claim experience continue ongoing, then that is probably where there will be a need to increase contributions beyond the medical tariff that will be issued, is just to make sure that the fund is sustainable. But in summary, the fund is healthy, and we do expect the fund to remain in a healthy position for the next financial year, or let's just say for the foreseeable future. Thank you, Mr. Chair.
Thank you, Mweneni. Thank you for that executive review. The full report has also been posted on our website. It is part of the meeting pack that we have, and this was just a summary of the highlights that is actually noted in the report. So we will then move over to the next agenda item. If you have questions or clarifications, I will ask that you note them down, or perhaps you can put some of them on the chat so that we can then address them. Normally questions are to be forwarded to the PO's office 14 days prior to the meeting. But I think we can take some of those clarifications and just clarify if necessary. So we move over to agenda item 1.6, which is then the investment overview by the investment consultant. That is going to be Kobus. If you can just, Kobus, the floor is yours.
Mr. Chairman, thank you very much. Good afternoon to the trustees and to the members. Thank you very much for this opportunity to present the fund's investment performance. Mr. Chairman, and as you've indicated in your opening remarks in your chairman's report, although there was a lot of uncertainty and during especially last year, and we've seen from that one slide of Mweni, this time last year, we were in a terrible period in Namibia with that third wave of COVID and the Delta variant that had a huge impact on mortality, etc. But from an investment perspective, the fund has done exceptionally well during these very trying and volatile times. And as has also been indicated, was then able to absorb quite a bit of the shortfall that we've experienced because of the adverse claims last year, was supported or could have been funded in from your positive investment returns. Mr. Chairman, Ben, if we can just move on to the next slide, please. Mr. Chairman, this year, however, has been a different picture. When we started the year, I think we were all very positive that we've been through COVID now and we need to go ahead with our lives. But the first quarter of this year has really been dominated by a couple of issues, main issues. The first one, of course, was the invasion of Russia in Ukraine. And then also subsequent to that, then had a very negative impact on especially resources. The oil price went up to $130. And then also it put further fuel to the inflation fears that have already started to raise its head last year, after we started opening up again with the supply chain constraints, etc. That already started to increase inflation. And this further increase in resource prices, especially oil, as I said, had then a further negative impact and put further upward pressure on inflation. Now, Mr. Chairman, if we look at Russia as a country, I mean, it's a massive land piece, of course, but I mean, they're actually only 2% of the world economy. But where they, however, do play a very important role is if you look at this slide on the left-hand side, in terms of wheat production between them and Ukraine, about 30% of the world's world export in terms of wheat is coming from Russia and Ukraine. And then you look at especially fertilizers, 25% of the world's export in terms of fertilizer also coming from Ukraine. Now, remember that a normal hemisphere is now in summer, so the farmers had to start cultivating their crops. And of course, you need fertilizer for that. But as a result of the sanctions, there was immediately a shortage of fertilizer, amongst others. That increased the input costs for the farmers. You had an increase in fuel prices, which also have increased the input costs for the farmers. And that started putting upward pressure on inflation. And then, Mr. Chairman, I think especially the concerning one is food inflation. If you look at basic foodstuffs, sunflower oil, meal, corn, those basic foodstuffs, which a lot of us are relying on for our daily bread on the table, that is starting to increase now, and we're expecting further increases in that as well. And Mr. Chairman, you can imagine as a country as Namibia, we're importing about 80% what we consume from South Africa, and all of those goods is coming by truck. Now, those transport companies is not going to absorb the increase in the fuel price. They're going to put it through to the consumer. And if you're already sitting with a vulnerable consumer and you now needed to start paying a lot more for those basic food stuff, you can just see that we are at a very, very precarious situation at the moment with inflation. And as I said, especially the impact on fuel prices. So, Mr. Chairman, on the next slide, you will see that immediately, as I said, the impact was then on especially oil. At least that have now normalized a bit, if we can call a level between 105 and 110 being normal, but we went up to $130 per barrel. And we even saw some expectations when in the initial stages of the conflict, there were some comments or even expectations for $200 per barrel of oil. So hopefully that didn't materialize. And let's just hope and pray that the current situation in Ukraine doesn't escalate further, because that can have a massive impact if there's further volatility, or if this should blow out to the rest of Europe and other NATO countries. It could have these serious repercussions for the rest of the world. And then, Mr. Chairman, of course, what we also need to keep an eye on is China, sitting in the back there. They would have loved to have done to Thailand what Russia have done to Ukraine. Taiwan, sorry. So that is the uncertainty in this whole game that's currently playing it out in Central Europe. Mr. Chairman, what is just interesting from the next slide is if you look at previous conflicts, and you can go back to the Afghan war, and you can go back to the Iraq war and the Vietnam war, you can see there that where the line is basically drawn, the uncertainty in the run-up, and then after the first shots are fired, that uncertainty and volatility continue, but you can then see how quickly the markets recover again or move back to their previous highs, because now we are aware of the war in Ukraine. I'm sure we were initially in February, we were all glued to the TV initially as this invasion started. Now, I mean, it's not getting, we know it's still there. The market has accounted for that, and we don't follow it as we used to. Yes, it had an impact. It's still continuing to have an impact, but I think the market is quite resilient, and what the market does always say is forward-looking, and already accounted for this uncertainty, and we know there's going to be shortages, etc. What will, however, turn this picture totally around again, as I said, if there's further escalations in the current conflict between Russia and Ukraine, and especially if it blows out to some of other countries or some of the other NATO countries also then become involved in this. This will have serious implications then. Mr. Chairman, on the next slide, we can just see what initially inflation started already raising its ugly head, or started towards the middle of last year. And you can see it's not only this time limited to the developing countries. You're sitting in both in Britain as well as the US with record levels of inflation. I think the UK came out last night with 9.1% inflation. The US also 8% inflation. And this initially started, Mr. Chairman, after we've started opening up as economies again. Now you can imagine, I mean, the economies were shut down for anything between 12 to 18 months. Factories was not producing. So when the economy started to open up again, there was quite a demand for goods and products. And of course, there was a backlog in those products to provide those products. And we saw that these big container ships, for instance, were lying at anchor for weeks on end before they could offload. And once they've offloaded, there was not sufficient trucks to transport this. So that created a supply-demand inflationary fears and triggered that initially. And that, of course, was then just now exaggerated by the increase in the oil prices, of course, as well. Now, of course, we all know the first reaction, or the immediate reaction from central banks, is to start rising interest rates. And we've then already seen what is about a 1% interest rate hike this year already, the last being 50 basis points a week or two ago. And Mr. Chairman, there's expectation that we will see another between 100 and 125 basis points increase between now and the first quarter of next year. So another 1.25% on top of what we already, the increases that we've already experienced. Now, Mr. Chairman, you can imagine, ladies and gentlemen, as I said, you're already sitting with a vulnerable consumer. Now you're having to pay more for your basic foodstuffs. You pay more to get to the shops to buy them. You buy less, and you have got less in the end of the month available to spend to start off with, because you have to pay more now in terms of the servicing of your bonds and in terms of the servicing of all of your installments and credit that you have. So, and Mr. Chairman, unfortunately, a hungry man is an angry man, and we must be very, very careful, or not careful, but as I said, this is why this is such a volatile situation that we're currently in, and such a critical situation. We've seen how quickly this can blow out, for instance, in July last year with those riots that we see in KwaZulu-Natal. Yes, there was other underlying issues, but it's if people are hungry, you're heading towards serious unrest, etc. Mr. Chairman, on the next slides, we will then see that because of the increased inflation, the interest rate cycle started to hike. And as I said, we're expecting further interest rate hikes. And just a further note on that is that the next interest rate hike is again expected to be about 50 basis points, so 0.5% going forward. And that then also had a direct impact on your bond yields on the next slide, which started to then also reflect this interest rate cycle hike. Mr. Chairman, on the next slide, at least from an economic perspective or from a COVID perspective, what we've at least seen is now that we have to start living with COVID. Fortunately, as Mwenev also indicated in that slide of hers, that this fourth and fifth waves, the mortality and the hospitalizations are a lot down. And then we've also seen in South Africa, for instance, yesterday, they've now removed all COVID restrictions from the regulations. Mr. Chairman, we as a country, we cannot afford further lockdowns. The economy, the damage that was done because of the last 2 years lockdowns, especially on the tourism sector, but also on your secondary industries, is severe, that we cannot afford further lockdowns. So we just need to push through, and let's just again hope and pray that COVID will be with us, but it will be, instead of a pandemic, an epidemic, that we can manage it, and that it becomes a seasonal flu or something like that. Mr. Chairman, moving on to the next slide. This is just a graph that was shown on China, sorry. The other concern, of course, is on COVID, is China's zero policy, COVID policy. And Mr. Chairman, whereas Russia is only 2% of the world economy, Russia is a big player in the world economy. And every time with the lockdowns, I mean, we saw recently Shanghai, a city of 24 million people being locked down again. That has a massive impact on the growth expectation, global growth expectations, because so many things, especially for us here in Southern Africa, our resources is exported to China. So the moment there's concerns on their consumption because of lockdowns, of course, that will have a knock-on effect on us as well. Now, we've benefited from COVID, or from China's initial COVID policy. And the reason being is with this initial lockdowns and the stimulus packages that was made available by your governments, where the rest of the world focused their stimulus packages on the consumer, China focused that on infrastructure. So they built more buildings and houses, roads and bridges and stuff. And of course, for that, you need iron ore, you need steel. And of course, South Africa is a big exporter of this. So that is why our resources sector have done especially well over the last 2 years, and have really supported our indices on the JSE. The performance came from your resources and from your industrial side because of this focus from China's side on infrastructure as opposed to on the consumer. Like in the United States, for instance, you've got a check of $1,500 through the post, and you can then use that money and go to the Walmart and buy a new flat screen TV, or you can invest it, or you could have used it to save, pay off debt. But on China, as I said, they focused that on infrastructure development, and that supported us. And so the moment there is concerns about further growth potential or slowing growth at China, that again has a knock-on effect on other emerging and developing economies as well, especially for us that is so reliant on our trade with China. Mr. Chairman, on the next slide, this is just some figures that was shown. This is South African 7-day rolling average. And this is just to again give you an indication of how restricted we were in terms of those lockdowns. People were just staying at home, not allowed to go anywhere. And that at least have now improved. And as I said, we now need to go through, and we cannot afford any further lockdowns. Mr. Chairman, coming back a little bit closer to home, on the next slide, and please don't read anything else in this slide. I was just looking for a picture depicting both Namibia and South Africa and our two presidents. So please don't see anything else in that, considering the recent press, etc. On the next slide, if you look at South Africa, Mr. Chairman, as I said, because of we actually had a very good performance in the first quarter. It beat expectations. And we actually saw a bit of international inflow of investments into the South African market. Mr. Chairman, you must remember we are part of the BRICS country, or South Africa is part of BRICS: Brazil, Russia, India, China, and South Africa. Now, of course, if you consider those five, currently we are the least ugliest of those five at the dance. So we became attractive in the beginning of the year. And we actually saw that our currency appreciated during the first quarter of this year. And that didn't make sense because of all of this volatility going on. But that was because we saw a bit of inflow of international money because they were looking for returns, they were looking for yields. And Mr. Chairman, that absorbed that initial massive increase in the oil price because our currency appreciated. Now, unfortunately, that was a situation I've turned around since. And what we've now seen with the latest fuel price increases, we're also now paying $22, $23 per litre, and the expectation is for another $2 to $3 increase. And again, my previous comments in terms of the negative impact or the further pressure that it's just going to put on inflation, and especially on things like your food inflation as well. On the next slide, as I said, our Namibian currency, the South African was basically supported by resources and industrials on the back of 10 cents, Naspers is holding in 10 cents, and then the South African and the Namibian dollar was one of the best performing currencies during this period in as well. On the next slide, that's just the indication of the strength of our currency during the first quarter. As I said, that picture have changed a bit because, and we saw the currency depreciating. Mr. Chairman, the next slide is probably our biggest challenge as Namibia, or one of our biggest challenges as Namibia as an economy. You can see there in 2025, we've got another 12 billion euro bond that needs to be settled. Unfortunately, that bond is in US dollar denomination. And we knew that we had a sinking fund to have provided for the payment of that bond or the honoring of that bond, but unfortunately that sinking fund had to be used for COVID relief. So yeah, according to the Minister of Finance, we're on track to meet our obligations. But Mr. Chairman, we all know the economy, we need to get growth back into our economy. We need to address unemployment because 2025 is just around the corner. And Mr. Chairman, unfortunately, or the reality is that you can either now roll over this debt, go and borrow it again, but remember that our credit status, our credit rating have also been downgraded. So if somebody is prepared to lend us the money, they're going to ask a lot higher interest rate for that because we've become now non-investable or junk status in terms of our debt. So we'll have to pay more for that bond. And Mr. Chairman, you can then easily fall in a situation where you pay one credit card with another credit card. And that could easily result in a debt spiral that could have serious repercussions. So Mr. Chairman, yes, challenges, as I said, we need to get growth back. We need to make it attractive for people to come and invest in Namibia. We need to address unemployment. That is our biggest challenges in Namibia. Just looking a bit forward, what we expect for the rest of the year. If we firstly consider it's obvious that the current turmoil in Russia and Ukraine is not going to be short-lived and going to be protracted. Then you can move on to the next slide, please. Inflationary is going to be probably first and foremost this year. The risk of slower growth, rising debt costs, and then also the South African structural challenges remain. Also keeping in mind that both Namibia and South Africa, we're going next year back to the ballot boxes, and both ruling parties have their conferences towards the end of the year. And then in South Africa, you're also sitting with load shedding and all of that. And Mr. Chairman, the virus is still present. I see there's now a new virus or a new outbreak or something. So yeah, probably now also part of our lives, new diseases, new risks, but that is life, and we just need to cope. Mr. Chairman, then looking at the performance of the fund. On the next slide, the total assets of the fund. I've just one back, please, Ben. If we look, I've given you the 31 December 21 figures because that is the period under review, but then I've also updated it to March this year. 643 million Namibian dollars. And you can see then 111 million invested with Namibia Asset Managers, 168 million with Old Mutual, 113 million with M&G. That's the old Prudential. 189 million with Sanlam Investment Managers, the direct property, and then 44 million in the Capricorn Investment Fund. And the next slide on the performance, Mr. Chairman, this is where we've seen that last year, 11.79% return during this period for the fund year ended. And as we've now already, you've mentioned in your report, and when you've also indicated that at least this positive investment returns were able to absorb some of the impact of the adverse claims during this period. And Mr. Chairman, considering that inflation plus 3.5 was about 8.12%, we're looking at a real return of about 6.5% during this period. So just unbelievable performance. And Mr. Chairman, you've been able to achieve that, to have a diversified portfolio where not all of the assets is invested in Namibia. A certain portion is invested in Namibia, a certain portion in South Africa, a certain portion internationally, and then you further diversify by means of investing in different underlying asset classes, equities, bonds, cash, and property. So not all of our eggs is in one basket. It's diversified, and you also have appointed different styles of managers as well. And Mr. Chairman, just finally, the investment committee have now recently reviewed the investment strategy. We're going through a process to look at whether the current strategy is still applicable, considering the changes that took place over the last 2 years. So there's constant monitoring by the investment committee of the performances and then this formal review that is now currently taking place. Mr. Chairman, that's all from my side. I thank you. As you've indicated, if there's questions at the end, we will be online. Thank you very much.
Thank you, Kobus. Thank you for that elaborative summary on the happenings around the world. That was a quick tour just to take us through what is happening in different economies, in different markets. And specifically, it is also important just to mention that these markets impact what is also on our returns with regard to our investments. So should there be questions, we will be taking some of the questions in the chat, and more specifically after we have covered our agenda items. The next agenda item is on the approval of the annual financial statements. The annual financial statements are the responsibilities of the Board of Trustees to prepare them. Once prepared, then we have our external auditors, EY, who then audit these reports so that they can then confirm whether they are presented in a specific way. And we are here now as Board of Trustees confirming that these financial statements were issued and there were no issues emanating from them, and they are actually an unqualified report. So as Board of Trustees, we are then requested to present these financial statements at the AGM for the AGM to approve them. So I will then request that the members that have gone through will then can move for the approval of the financial statements. Ben, is there something?
There's a hand from a member, Mr. Sybrand, De Beer.
Yeah, Mr. Sybrand, we will be taking questions. Perhaps we can just.
Perhaps it's for the investment.
Can we just clarify the question, or Mr. De Beer, we cannot hear you. Mr. De Beer, or are you able to put your question in the chat?
Good afternoon, sir. How are you?
Fine, thanks. How are you, sir?
Also fine, it's Mr. Simon de Beer from Bloemfontein, South Africa.
Yes, you can go ahead, sir. Your line
I'm already been a member for. But there's only one question that doesn't come to my mind. Because in South Africa, where a medical aid card, we cannot use a smart card here in South Africa. But when my wallet was stolen about a year back with my medical card in it, but isn't there other way but we can make a different kind of medical aid card for South Africa?
Thank you, Mr. De Beer. We have taken note of your question.
People to use. But it does
Mr. De Beer, are you done? We have taken note of your question. We will attempt to respond at the end of the meeting. As we've indicated, can we perhaps take those questions after as per the agenda item number 10, but preferably we would like you to perhaps give it in the chat so that we can then sort of work on them as quickly as possible. But we have taken note of it.
And I was very happy with the self-filed beneficial I'm on this, okay? But I will hear from you. Okay.
Thank you. Can we then get back to our agenda item, the approval of the annual financial statements? You can, we can approve the financial statements, even you can indicate it in the chat. Mark, have moved for the approval. Can we have a second? Thank you, Tian. We can move now to the next agenda item, which is the COVID report. This is going to be done by Alison.
Thank you very much, Mr. Chair. Because COVID has changed so many lives in all different ways, I thought it would be pertinent to give you as members a bit of data and history and what the costs have been. Currently, well, at the end of 2021, we had 67,000 odd members. 30,000 of those were principal members. We had 19,700 odd beneficiaries tested for COVID out of hospital, 436 in hospital, with a total of 20,000 Namibia Medical Care members were tested for COVID. Of that, 1,409 members were admitted to hospital, as you can see on the screen, which came to a total of 150 million. This is over the two-year period from the time of COVID, March 2020 to last month. 150 million was only for out-of-hospital COVID tests and hospital-related claims. That being said, one could almost double that amount to 300 million if you consider all of the people who did not get tested, who stayed at home, isolated themselves and treated themselves at home via their GPs. We do not have those statistics because we are not sure whether somebody was being treated for the normal flu or whether it was COVID. So it cost us as a fund about 300 million over the whole COVID period. If we work out on an average per member admitted to the hospital, it comes to 33,000 per member who was admitted. That is an average. Some members' claims reached 1.8 million and others were less than that, 33,000, but on an average it was 33,000. I just thought that would be of interest to you to see, compared to the 1.65 billion that we received claims requested, the 100 and 300 million is a very small amount compared to the bigger picture. I just thought that would be of interest to our members. Thank you, Mr. Chair.
Thank you, Alison. These statistics are also in our meeting pack, which is available and which was made available. So members, you are encouraged to have a look. And if there are any clarifications, those can be sent to the PO's office so that she can just clarify if there's anything that you perhaps want to understand further. Moving on to our next agenda item, that is the approval of the trustees' remuneration. Ben is going to take us through. The floor is yours, Ben.
Thank you, Mr. Chair. Good afternoon, members. So as we always do, we present the proposed increases of the board sitting fees for the AGM to approve. Before we get to the 2022 proposed fees for approval, we usually also take you through what the industry pays the trustees for sitting fees. On the screen there, you can see NMC versus the other open medical aid funds in Namibia. You can see that we are well within or we are in line with what the other open funds are paying. Are there any questions before we look at the proposed fees for approval? All right, let's move on then to the, yes, so on the screen, these are the proposed fees. So it would be a 4.5% increase from the 2021 fees. So for approval, Mr. Chair.
Thank you, Ben. I will then give it over to the members for the approval. There is the recommendation for approval of 4.5%. Perhaps the Board of Trustees will not move the motion. Can we have members move the motion for approval and of the fees?
Mr. Chair.
Thank you.
Approved.
Thank you. We have two approvals from Joanne and Carlin. We can then move over to the next agenda item. Thank you very much. The next one is then other matters. As we have indicated that as per our rules, these matters should have been brought to the attention or forwarded to the PO's office 14 days prior to the AGM. The reason for that is that for the fund and management to prepare so that we can give detailed responses to those issues. So we have received about 3 or so items, but since we also have some of the clarifications in the chat, we are going to address those ones, and some of them were already addressed, but we'll just go through. But I'll give over to Alison to take us through the items that were forwarded to the PO's office as per the fund rules for clarification.
Thank you, Mr. Chair. I would like to reiterate the reason why we request these questions before the time is that we have at least 10 specialists in their fields who assist in managing the fund. Actuaries, auditors, the administrator, legals, investment consultants. So to handle a question at a stage like this, when we just read it, we might not give you the most informed decision. So it's purely for that reason that we have this point in our rules. I'm going to, before I go to the questions actually in the pack, I'm going to refer to the question with regard to the cost of COVID. In the middle of 2020, the industry and the Ministry of Health got together to discuss how they were going to handle the challenge of the rollout of the vaccines. All of the funds of Namibia were involved in this discussion, and all of the funds agreed that each fund would assist as best they could. These questions still went back to our boards, and the boards agreed to pay 731 for each member who received the vaccine. That 731 was not for the vaccine itself, which we're all fully aware the fact was donated. That 731 was the cost of rolling out the whole process. That includes maintaining the cold chain of the vaccine. That means in ensuring that the vaccine stays at a certain temperature, otherwise it loses its validity. Then the additional staff that had to accommodate this, the transport involved in getting those people into the rural areas, as well as the consumables. For those of you who had the vaccine, it involved a Webcol swab or a piece of cotton ball with a disinfectant, the needle, the syringe, 2 needles. So those costs were covered by us. Not one member paid for that. The fund paid that money out of their reserves. What you saw on your statement was purely for data collection and auditing. We cannot dish money out without explaining to our auditors where it went to. And that is why you've all received a statement dated December 2021, I think, saying this amount of money has been taken off or it has been given to you or removed from your benefit. That money was never taken off your benefit. We just had to do that for auditing purpose and for collection of data. So that's the question of the COVID costing, which I saw earlier on the screen. The second question here refers to Topaz and Topaz Plus not paying for cardio health. I'm not quite sure what cardio health is or what you mean by cardio health. If you mean gym and exercising, I'm afraid the functions of the medical aid fund are to defer costs for medicines and for medical treatment only. So although we used to benefit or incentivize members who used to go to the gym to maintain a healthy body, unfortunately it is outside of the Medical Aid Funds Act and the rules of the fund. We may only give out money for medical expenses. So that is why we can no longer assist with gym, if that is what you refer to as cardio health. Perhaps it would be best to send me an email on explaining what you mean by cardio health, and I will respond to it, or I will get the relevant specialist in that field to explain the answer to you. Mr. Sabrant, De Beer, we will do what we can to try and, do I understand correctly that you didn't receive a new card? If that is the case, we will make sure you do receive a card after yours was stolen. But again, the administrator will handle that issue on Monday. They are in the meeting and they've taken note of your question. We will contact you. Then the questions that were submitted to my office was, does the fund pay for COVID tests for those who have been in contact? Yes, we do. In the beginning, when the claims, the COVID was rife, too many people were too nervous and were just going to be tested. The demand on pathology, the path labs was just too much, and they could not handle the influx. So they requested us to put almost a block on that only those who actually went to the GP, showed signs and symptoms of possible COVID, could go for their testing. As soon as the high demand for the test dropped, we stopped expecting a GP referral. So yes, answer to your question, we do pay for contact for people who've been in contact, and no, you do no longer need a GP's referral. The other question on that same point was, what did NMC do to do something about the cost of the testing, the PCR test? In September, the Mental Health administrators approached PathCare to ask if they could reconsider the price, which at that time was $850. PathCare looked at they looked into it and they came back and said, yes, $750. So we did do our best to try and reduce the cost of the PCR testing. So it started off at $850 and now it is $750. I trust that answers that question. The final question was with regard to today's meeting. The question was that a member doesn't agree with the fact that this meeting was not face-to-face. The last 2 AGMs, we regrettably have had to, due to COVID regulations, have virtual meetings. And we actually discovered that more people attend the meeting virtually than face-to-face. But due to your question, we will ensure next time that we have a hybrid meeting that will be face-to-face as well as virtual. So we will make sure to do that here. Out of interest, the member who raised this question felt that we are not being fair to our members who don't have access to social media, 92% of our members have cell phones, and 87% have email addresses. So we felt we were approaching at least 60 or 90% of our 30,000 principal members. Thank you, Mr. Chair. I see there's another question, which is a personal question about submitting a claim. Would you allow me to look into your claim? I will get hold of you on Monday, or the administrator will, and see if I can assist that way. Because I don't have access to your claim when it went through or anything, would it be possible for me to answer that question? I will do that, and we will put your question and the answer on the website for any of those who are in the meeting and are interested in looking into it further. Thank you. Apparently there's more. Sorry, I'm challenged without seeing. I can't see the screen and the screen at once.
Okay, so this member is asking, I would like to know the difference between the claim amount and tariff amount. This is from Magret Amutanya.
NAMAF is the Association for Medical Aid Funds, sets a benchmark tariff. And I have to accentuate the word benchmark. It is just the actuarial studies have done, and they determine that that procedure costs on an average about that amount. And that is the tariff. The general practitioner, the surgeon, the hospital, not hospitals, the general practitioners, any healthcare providers may bill what they like. We have no control over that. We just set a benchmark to advise you as a member that the actuarial studies done by the industry feel that that's what the claim should be. We are working daily to try and avoid co-payments by members, out-of-pockets, split billing. We're looking into all of those issues to try and make your experience not costly.
One more question from Johanna Cornelius. She's asking, I'd like to know the difference between the annual day-to-day benefits for the family and the annual day-to-day benefits for a dependent.
There is a difference, yes. Do you want, I'm not sure. There is a difference. You can answer.
Yes, okay. So the difference is when you are a single member, for example, the benefits per dependent would be for that specific dependent. And then for a family, you have a grouped benefit, and that benefit can then be used by the family. So you'll see there's always the main member, and then there is the dependents. So you have the principal member, his benefits, and the dependent's benefit, that would be the family benefit for the overall annual limit. I hope that answers your question.
Thank you very much. I take that we have taken most of the questions. Those ones that are specific as indicated, we will then request that they submitted to the PO's office so that the PO can have a look at them. Some of the questions, we urge that the members visit either the NMC office or the administrator's office for clarification. I see I have one hand. Perhaps I will then give an opportunity for two members to say something on the platform before we then close off our AGM. Is that?
If I may, through the chair, the questions which are member specific, which insinuates I claimed this and I didn't get the response, please allow us to do this personally after we've investigated your claim. Because without knowing what the situation was surrounding that claim, it's very difficult to respond now. So please give us the opportunity to approach you on the Monday.
Thank
Can
you.
Can you please provide us your contact details so that we can respond to you on Monday on these questions which are member specific, not generally about an issue of the fund.
I give over to AJ. Is that AJ? Who's Jessica? Is that AJ?
Yeah, if that person A12, if that person, please let us know who they are. It's with their hand up.
Please go ahead. A12, AJ A12. Please go ahead. Identify, introduce yourself, and then we will hear from you. Just 1 second. It seems like you are muted. Yes, you can go ahead now.
Can you hear me, sir?
Yes, we can hear you now.
Okay, my name is Albert Akoko, and I'm one of the member in NMC, Ruby. Actually, I'm an employee of NAMDEP. And we joined the NMC probably 6-7 years ago. At the beginning, we were enjoying very well the benefits of NMC. But now we are seeing a lot of rules are made whereby we even don't know them. We only came to come across with those rules when we are applying. For example, when you are referred to the specialist, there are claims where you have to do like travel and accommodation reimbursement. The very first time my claim was declined because I didn't pre-approval. They said so, and it was declined on the spot. And then the second this year, again, it was declined because they are saying I was not referred by the doctor, by the GP, who is in Oranjemund. But unfortunately is that sometimes you are referred by the doctor, perhaps you were in your holiday. And then you see the doctor and he referred you, but he did not, I mean, you did not go and see the specialist on that specific time in your leave day frame time, you understand? Then you went back to work, and then from there, perhaps when you made the booking to the specialist, is also into your time frame when you are at work. Then when you have to travel back, then they have to say no, because we are not referred by the doctor who is in Oranjemund or the place where you are working, you cannot be helped. I feel this is very, very bad, and it's really affecting us. And I think we need to look into this. And the other thing is the levies. The levies, they are going up and up. I don't know how they are actually being changed, because sometimes you see the medicine it's $300, and again the levies, you see the MNC, they are only saying they are only paying perhaps 180, and then you have to pay again 100 and something. So it's the levy is too much for us. I think the NMC has made their deductions in a manner that they are also included those for us to be affordable to medication. So that's only my points I wanted to make. Thank you.
Thank you. I appreciate your question, and I'm sure it is justified. Please allow us to go back on Monday and actually look at this, look at the claims. We will also look into the transport costs from NAMDEB, because we understand that the doctor isn't always available where you are, or the GP. So please allow us, considering this is also a sort of a member or an area specific issue, we will look into it and get back to you. With regard to the levies, I presume you are referring to the monthly premiums you have to pay. I'm sure if you heard at the beginning of the meeting, currently the claims are more than the premiums we are getting in. So we need to be very cautious to ensure that we will be able to cover all of claims in the future. But we will get our actuary to prepare a response for that. And as I said earlier, all of these questions and the responses will be put onto the website for anyone else who wishes to go into them. Thank you.
Thank you very much. With that, we have come to, I will allow one more, especially, and this is the last one, and we will then close off. Especially, and as indicated earlier on, the questions should be submitted 14 days before our AGM, so that we are just better prepared in addressing those questions. But let us allow in this is question, especially there seems to be from our side.
Sorry.
Can you try? Are you able to type your question?
Okay. Okay, let me check.
Unfortunately, we are unable to hear you. Can you perhaps then you have the PO's email address? Can you perhaps send that question to our PO so that it can then just be taken up? So these questions will also be, with their responses, will also be posted so that everybody has access to them. So at this point in time, I would like to thank you all for attending our meeting, and more specifically our members for the continued support, and all our stakeholders that are making sure that our fund remains stable. Just one thing is that we need to have this fund so that we can then cover or deliver on our mandate. I would like to wish you a good Friday and happy weekend. Thank you very much.